Hi everyone, and thanks for joining me in my share and review. So if you're unaware, today I'm actually going to review a share on the American Stock Exchange, and it's quite a common one. It's Apple. It's a request that I've had from a client, which is great. I'm happy to do that. In fact, I love it when people make suggestions and want me to have a look. So before I jump across and share my screen, remember this is just going to be reviewing this share as if it was a New Zealand one and running through the same principles and same methodologies that I would use if I'm buying shares on the New Zealand market. In fact, I do have shares in the American market, and this is exactly what the methodology that I use. So before I jump across, just remember that this is educational purposes only. It's certainly not tailored to anyone's personal advice or anything specific like that. If you're looking for personal advice or recommendations, then you do need to go and talk to your own financial advisor. So let's share. Okay, as you can see here, I have got Apple up on the screen, and it looks like it's sort of reached some sort of highs over the last 2 years. Back at this sort of $198 level. We've obviously started to see it fall in recent times. We've had a bit of a gap here, which can be quite a negative sign. Also, if you're someone who watches the candles and really understands what the candles can mean, what they're saying, what we've got here is a definite bullish engulfing pattern. So it's a candle that opened higher than where it closed, so the close was a lot lower, and it fully engulfs that previous candle. Okay, so that is a negative sign. We'll just have a look over the 5 years and just see where. Yeah, so this over the last 5 years, obviously Apple's hit a high point of $198 a share, and that was back in December last year. So it had been having a really quite a good run. Let's go back to the two-year one. As you can see here, they do pay out regular sort of quarterly dividends as well. Oh, it's even a little bit more regular than that, actually. Oh, no, it might be quarterly. Yeah, because the date's around the opposite way to what we're used to. Okay, let's put the indicators on, being the moving averages. So I always use the 30, and I put the exponential on, and I also like to use the 15. And because I have got this on a weekly chart, these moving averages, because it's a 15 period or a 30 period, that becomes a week. Okay, so it's a 30 or 15 week moving average. Right, you can see here that the 15-week moving average crossed below the 30 at around March this year, okay, middle of March, and it's trended below. The share has now been trading below both of those moving averages. So for me, that's certainly a sign that I would not be jumping on board at this stage. I like to see shares that are actually trading above these moving averages, because then it tends to be the path of least resistance. And if you look back here, back in March last year, you can see the moving averages crossed to the positive. So that 15-week moving average crossed above the 30, and that then led on to a really incredibly strong performance, which is something that does often happen. We then went through a bit of a sideways patch, and obviously the moving averages, it did it fell below the 15-week, and eventually it did fall below the 30-week, but the moving averages never crossed, and then it went on to rally again to make that new all-time high. Again, we've seen it come back, and we've had a big drop through here at the end of December, beginning of January. And you've seen a little bit more sideways movement, really nothing of significance, and then we've dropped again. And this time, the 15-week moving average has fallen below or crossed below the 30-week moving average. So for me, that's definitely a sit on the sidelines and wait until they cross to the positive. Even if I pop that over a 5-year period, and you can see here, so this was back in March last year when they crossed to the positive. We've obviously had it sort of meandering below, and it fell here. So May 2022, it fell below, and it continued to go lower. It did cross again in August 2022, and it just momentarily went higher before it started to fall again. Okay, so sometimes you can get some false signals using this methodology. I just go back a bit further. My screen's a little bit too small to even sort of see those moving averages at this stage. So I'll just jump back to the 2-year. Okay, I'll just take these moving averages off, and I will see if if I'm able to get it. So it trades on the NASDAQ. We'll see if we can make a comparison to the NASDAQ. Yes, we can. There we go. So because it trades on the NASDAQ stock exchange, I also want to see how it's performing in relation to the overall broader market. And you can see here that basically back in January this year, it fell below. So the NASDAQ carried on. Performance carried on. It has come off. NASDAQ has come off again last week because it's been pretty volatile for a lot of markets, to be fair. But as you can see there, Apple continued to fall against the NASDAQ. So again, for me, that's a little bit of a warning sign. And one last thing that I did want to talk to you about as well, up here, this is where Apple closed. So it closed at $165 per share, which was down $2.04 or 1.22%. But the after hours trading, it has fallen even further. I'm not sure how long their after hours trading actually runs for, but you can see here it's fallen by another 36 cents or another 0.22%. Also, if you come down, and if I look at both these, the MACD here, which is the moving average convergence divergence, you can see where that is in a downward pattern, okay, which does correspond to what's happening in the share. So they're both sort of correlated there. The RSI, so the relative strength indicator, sure, that's gone down, that's fallen quite low. It's about 37, but that can usually just indicate whether things are perhaps overbought or oversold. And obviously, if something's overbought, it doesn't necessarily mean sell. And if it's oversold, it doesn't necessarily mean buy. So they can continue being oversold or overbought for a lot longer than perhaps we can think otherwise. So I hope that's helped. So for me, like I said, Apple's not really a share that I would be jumping into. I do trade the American markets. I tend to look for exchange traded funds, or being ETFs or index shares, rather than just going company specific, only because there are just so many to look out for. But yeah, I hope that's helped with Apple. That's just the methodology I use when I'm looking to buy my shares. So yeah, I hope it's helped and I hope you've got some value out of it. And if you had, obviously, I love these comments coming in and I love reviewing shares for you if it's adding value. So just drop me a line. Love to hear from you. Take care.